Hello everyone, welcome back to my channel. If you look at the global headlines in 2026, the global environment appears increasingly uncertain, driven by continued interest rate debates, constant currency movement, and rising geopolitical tensions worldwide. But personally, when I look at Kuala Lumpur property, something interesting stands out. There's no dramatic boom, no major crash. Instead, something much more important is happening, whereby a quiet transformation. And in real estate, the biggest swift always comes through completed infrastructure, stable policies, political stability, consistent rental demand, and long-term capital slowly repositioning itself. Today, I want to break down what is quietly reshaping Kuala Lumpur's property market in 2026, especially for foreign investors who are watching this city. Let's start with something very real, that is infrastructure which are not future planned but completed already. First, we have better pedestrian connectivity around KLCC. Then, with the opening of Ombak KLCC connecting lifestyle, office, and retail spaces with Surya KLCC Mall plus MRT integration is definitely a big plus point. There are also more multinational companies consolidating their presence in TRX as the financial district. And of course, upgrade across Bukit Bintang ahead of Visit Malaysia 2026. A common question investors ask me is, does infrastructure completion immediately push up property prices? To me, usually it will not immediately. Infrastructure first reduces risk. Before the prices move, tenant demand becomes more stable, occupancies improve, live-work convenience increases, pricing confidence always comes later. This is the point where short-term excitement fades and long-term planning begins to show. And Kuala Lumpur is clearly moving into that phase. When people talk about property markets, they often focus only on prices. But prices are the result, not the foundation. The foundation is monetary policy, economic activity, and the strength of the financial system behind it. In July 2025, Bank Negara Malaysia reduced the overnight policy rate to 2.75%, and that level has remained steady into 2026. This was not a reaction to crisis, it was a controlled adjustment to support growth while maintaining stability. For foreign investors, this kind of consistency matters more than fast growth. Stable rates mean lower financing uncertainty and easier long-term planning. This stability is supported by real economic performance. In 2025, Malaysia recorded its highest total trade volume in 68 years, surpassing Ringgit Malaysia 3 trillion, driven largely by export in electronics, E&E and higher value industries. This tells us something important. Malaysia's economy is not struggling to survive, it is functioning, producing and participating actively in global trade. Another factor that often gets overlooked is banking strength. Malaysia's banking sector today is more conservative and better regulated than in the past cycles. Banks are well capitalized and lending standards are clearer. At the same time, financing is still accessible to foreign investors as long as their financial profile is healthy with strong income documentation. This matters because access to responsible leverage allows investors to preserve capital and diversify their portfolio. Property markets don't collapse just because prices stop rising. They collapse when the financial system breaks. And in 2026, that systemic risk is significantly lower than before. As we know, currency always gets attention, right? In 2025 and 2026, sentiment towards the ringgit improved due to a few things. Stronger trade performance, more consistent policy direction, political stability. But I always tell investors this, currency is a bonus. If someone buys only because of exchange rates, that's a short-term thinking. What matters more is the political and policy stability. Malaysia's clearer direction combined with a long-term initiative like Visit Malaysia 2026 sends a strong signal globally. It lowers uncertainty for foreign capital that matters more than short-term currency movement. This next point is critical. Not all Kuala Lumpur properties behave the same. Prime and first-tier KLCC location perform very differently from second-tier areas. In 2026, what we are seeing is occupancy stabilizing in well-managed KLCC building, more demand in corporate mid to long-term tenants, higher demand in short-term rental activity. At the same time, Malaysia ended 2025 as the most visited country in Southeast Asia, recording 38 million international tourist arrival, with momentum continuing into 2026. So in 2026, Kuala Lumpur is clearly a micro-market city. Location within a location matters, building quality matters, and management qualities matters. Rental stability always comes before the healthy growth. Now, let's look at the history. After the 1997 crisis, the early 20s were a recovery phase. From 2008 to 2013, the market experienced a strong growth. By 2012 to 2013, buying risk was at peak. After 2014, the market entered a slowdown. Then came 2020, when the pandemic disrupted. So where are we now? From 2023 to 2026, we are in an early rebuilding and stabilizing phase. Market sentiment is calm, cautious, and become more selective. If we look at Malaysia's roughly 18-year property cycle, stabilization usually comes before the next expansion. We are not in strong growth yet. Historically, this is the phase where long-term positioning begins quietly before the confidence fully returns. Another important shift in 2026 is investor mindset. In the past, many investors chase price capital appreciation. Today, most of the serious investors ask different questions like, what is my net yield? How stable is the demand? How easy for my exit strategy later? This is a sign of market maturity. 2 to 3 times growth like year 2013 is unlikely to return anytime soon, and that's not a bad thing. Do remember, sustainable growth attracts long-term capital. Let's compare regionally. In Singapore, entry prices are significantly higher with additional stamp duties and tightened foreigner ownership rules. While Bangkok's market is strong but heavily influenced by tourism, and recent building-related concerns have made buyers more selective. Hong Kong remains a major financial hub, but geopolitical shifts in recent years have added uncertainty for some investors. Kuala Lumpur sits differently. Entry prices are lower compared to these cities. Rental yields are generally more sustainable. Ownership laws are clear, lower stamp duty for foreign investors, and with Malaysia's multicultural environment and political stability make it comfortable for both investor and the long-term resident. At the same time, Malaysia is aligning itself with future-focused industry like AI-related infrastructure, data center, green and renewable energy, sustainable urban development. Over the next 5 to 10 years, these trends support job creation, economic depth, and long-term housing demand. Malaysia is definitely towards aligning with the global trends. One final point that often gets overlooked. Malaysia's strength isn't just data, it's people. The cultural openness, diversity, and a strong sense of community, this quality attracts long-term residents, families, and global talent. Just for your information, Malaysia is a country where different cultures, languages, and religions coexist comfortably. English is widely spoken, international schools and healthcare are well established, and daily life is relatively easy for foreigners to adapt to. This matters more than people realize. When professionals relocate for regional roles, when entrepreneurs set up operations, when retirees choose Malaysia for long-term living, that creates sustainable housing demand. What is the quiet transformation of Kuala Lumpur property in 2026 then? It's not about the fast price jump, it's about completed infrastructure, policy discipline, strong banking foundations, rental stabilization, and smarter investor behavior. The biggest change isn't about the price, it's how people invest. Kuala Lumpur is quietly shifting from short-term thinking to long-term structure, and that's where the best opportunities begin. If you have been following the Kuala Lumpur's property market, this is an important stage to understand because stabilization often comes from the next phase of growth. Let me know in the comment box which factor do you think is reshaping Kuala Lumpur property the most. Last but not least, if you are considering increasing your exposure to Kuala Lumpur property market, feel free to connect with me to discuss the opportunities available. My WhatsApp link is in the comment box below as well. I'll see you on the next video. Bye!